I'm Jack from Options Insight, and welcome to Trading 101. So commonly referred to as the fear index, the VIX has earned this title for its tendency to be up when markets are down. But the VIX is far more valuable than just a way to gauge whether or not people are feeling bullish or bearish.
So what is the VIX? The VIX is calculated by the Chicago Board Options Exchange, CBOE, and shows the market's volatility expectations. The calculation of the VIX collects data on all put and call options for the S&P 500 expiring in 1 month and takes a weighted average of the implied volatility across all option strikes. Introduced in 1993, the VIX allows traders to gauge volatility and the market sentiment in a given time period. And in the world of options, your view on the VIX plays a crucial part in decision making when exploring which option strategies to use. Extremely elevated levels of the VIX are often thought of as a reverse indicator, showing markets are too fearful and a rally is the more likely outcome. On the other hand, very low levels suggest market complacency and can be used as a signal that hedging risk makes sense. The VIX is a forward-looking index as it uses implied volatility, which is the market's expectation of future realized volatility as priced by the options market. If people are willing to pay more for options because they expect movement, then the VIX goes up. If everyone wants to sell options to earn premium, then the VIX goes down. It is important to distinguish between implied volatility, which is based on market expectations, and realized volatility, which is what actually happens. If the value of the VIX is increasing, it is likely that the S&P is falling, and if the VIX is declining, then the S&P is most likely experiencing a period of stability and/or rising. If you look back at markets historically, they tend to become more volatile on the way down and less volatile on the way up, hence this inverse relationship between the VIX and the S&P 500. This chart shows its negative correlation in action. Volatility can be seen to increase in line with turbulence in the market as SPX sells off, whereas when stock prices are rising, the VIX index typically tends to fall or remain steady. Bear in mind, however, this is not a direct correlation and may not always be the case, as you can see here during the first week of February. There have been times where this correlation breaks down, but they tend to be short-lived and rare. So, why trade the VIX? Due to the strong negative correlation the VIX has with the stock market, it has become a popular instrument amongst traders for portfolio diversification and hedging. For example, if you have a long position on a company inside the S&P 500, you may believe it has a good long-term future but want to reduce your exposure to short-term volatility, then you may choose to buy a position on the VIX with the expectation that the price of your asset is going to increase, but just in case it doesn't, you have some insurance. This strategy is known as hedging and is used amongst many traders to protect themselves from short-term bearish price action. However, it is far more common for your everyday traders to use the VIX as more of a tool to gauge the well-being of the market and then decide their positioning. For instance, in the grand scheme, we know that the stock market typically moves up over time, and since the VIX is negatively correlated to the S&P, we can assume that for the most part, the VIX will mean revert lower after spikes of volatility as markets recover, possibly providing traders a signal to go long or even sell some puts to earn premium. Buying and selling vol is a speciality of Imran Larka, the founder of Options Insight, so be sure to check out the other videos on this channel and join the Options Insight free Discord community to gain a better understanding of how professionals think about options and volatility markets. Thank you for watching this video about the VIX. Hopefully you were able to learn something. If so, then please don't forget to subscribe and like. Also, please comment below with any questions or feedback and if there's any particular topics you'd like me to cover next. I'm Jack and this has been Trading 101.